I think having a job is really important. I think, if trading is your full-time activity, that's like your lifeline now, and you start making very irrational decisions. So I think it's very important to have a stable job, and then decide, how much money you're willing to risk, and just full port into whatever side.
And by full port, you mean go all in?
All in, yes. Because then you're like fully invested, you're fully concentrated, you're tracking every movement. For me, like if you're right and you're only in like 5%, like you were right. That's really incredible. But you only got to gain only like from a little bit from there. Even if I had like $20 in a stock, I'm just obsessed with it. Right?
But if you're wrong, I mean, then you only lose,
True,
let's
but
say,
when you're wrong, you could sell.
So
right?
here's my general take on it, my unsolicited 2 cents, is that I think for a specific person, this strategy is probably better. But I would also hesitate at promoting something like this widespread, because I know a lot of people are going to get absolutely rinsed. Do I think the average person listening to this right now is going to be able to do the right amount of due diligence, have, assess their own risk profile well enough to actually capitalize on this? I don't think so. But for the specific person, I actually think that this makes a lot of sense. I know I get a lot of like flack for always buying and then the stock goes down.
Oh, tell them about your recent one, Jack.
Yeah. So like I bought a bunch of Bloom Energy like a week ago, and then it goes down to like 230. But I also bought at 230. And so now it's like kind of like going back up a little bit. I bought some call options, sold some weekly puts and stuff like that. But this all to say, every single individual stock I have ever picked has outperformed every index fund I've ever invested in. And so I'm like, if I had just gone in heavier, like I would, I'd put like $2,000 into an individual stock while I have like a few $100,000 in index funds.
Very funny is Jack has selectively forgotten 2020 and 2021.
Well, even if you account for that, I'm probably up still about equal with my individual and ETFs. Mm-hmm. But 2020 and 2021, I got margin called on Palantir and Robinhood, and I was forced to sell at 10, but I was buying them at 15 and 20 and $30. And now they've skyrocketed. And so for me, I was like getting margin called, and I was like, I have the cash in my high yield savings account, but like this is like my fun money. I'm not even going to like feed into it. I should have. But still, the stocks that I had picked at that time were the correct stocks that were going to end up doing really well.
Oh, 100%. 100%. I mean, I think you kind of hit the nail. Maybe the framing is better positioned to for most people. You had a fund account, right? Mm-hmm. And you were technically all in high risk stocks or individual stocks in your fund account, right? So like, I don't know, people make fun of me online all the time. They're like, oh, Kevin's all in these random stocks, even though he has like $11 million in index funds. Like, I'm very transparent about this. Like, it's in my X bio, right? Like, my net worth is, 11.6 million, and my all in challenge account is 52K right now. Like, people could do the math, right? Whatever people are comfortable with, just put that aside, make a whole new account for that, and just go all in there.
But now, if you say you've somehow bought some of these stocks with like an hour of research, let's just say, where does it intersect between gambling and investing? Because it just seems like there's an element of randomness that goes into all of this, where it might lean into gambling a little bit.
To me, gambling can go to zero. Right? Gambling can go to zero overnight, out of your control. And again, with most stocks, right, you're not going to go to zero overnight. And so that's where I draw the line between gambling and trading.
Well, couldn't you say also with a slot machine, you're not going to go to zero. Every spin, if you do dollar spins, you're going to lose on average, but you could also just as easily stop at $80.
Yes, unless you just put it all on one spin or on the roulette table, put it on one trade. I mean, I'm also just a very simple person. Right? Like I can only really track like one or two stocks at a time, right? Like I think, you mentioned selling call options or whatever. Like I've never sold an option. I'm a very simple person. Like I believe in a stock. I think this is a good price. I think it's going to go up in the next couple days, couple weeks. Like I think that is actually rather promotable to a general audience. That like just simplify. You don't have to get into all these kind of crazy kind of things and deal with margin and trying to make more money. Just like find a good stock that you think is a good price. It's got a good story. You think it's going to go up 5-10% next week. Sell, buy low, sell high, and then find another stock.
What are some of the red flags that stop you from investing into a company?
Recently, if the wrong type of promoters are talking about it, right? Like there's a lot of, shady people on X, a lot of shady things happening. People are promoting penny stocks and these people have, they're anonymous and they're not transparent. Like I'm super transparent. Or like I've been, I was thinking about it. I've been sharing every single trade I've made since 2020. Like either on Reddit or on After Hour or on X now. Like I'm extremely transparent about when I buy and when I sell. And other people, they'll talk about like when they buy, but they'll never talk about when they sell. Or they're sharing, obviously Photoshop screenshots or screenshots they took for someone else on their Discord. And so if, I post video trade receipts. And so well, that's the biggest red flag. Like recently there is a stock that's come across my radar. People keep DMing it to me. That's another red flag. If someone ever DMs me, like, hey, you should check this out, I'm like automatically like, no, like you probably have some ulterior motive.
How often do you see pump and dumps?
Back in the day, I saw it quite often. I think the algorithm has done a much better job of like filtering that kind of stuff out, or maybe I just I just don't care about that stuff, right? If it's a sub-$1 billion market cap, that's automatically like pretty much like an orange flag for me, because that's easy to manipulate. Yeah.
And how do you know when to sell?
I sell a stock or swing trade a stock, right? Either when the thesis has been validated, invalidated, or I find a sexier play. And so, if a stock, like for example, I'm playing earnings, right? And earnings was good. It popped 26%, which was my recent trade on Pang. Perfect. It was an earnings play, thesis validated, sell, right? Or other times I'm just holding a stock, right? Kind of like I said, I'm just waiting for a catalyst to happen. Maybe it's just like bobbing, sideways for a little bit, and I find something else that's like more exciting, right? That has like a news coming up next week, or they just launched a partnership. I'm like, okay, then maybe I'll swing to there and then swing back. That's actually that's how I missed out on GameStop.
Tell us about that. What happened to GameStop?
Yeah, so I was one of the earliest whales on GameStop. I put in $1.3 million into GameStop in October of 2020. Okay, my cost of business was around $13 a share back then. And I held until December of 2020. So I missed the squeeze by a month.
How much would you have made?
Oh my God. I believe $120 would have been $10 million. So it went up to 420. So probably around 30 to 40 million if I held to the top of the squeeze.
You would have 40x'd.
Yeah.
How often do you think about that?
I don't think about that at all.
Okay.
During those days, I was ecstatic because we were right. The short squeeze and all that kind of stuff. Like the thesis was right. I was celebrating. I was dancing alongside, Roaring Kitty every day.
You know what's funny? I actually bought GameStop when it was $3 and something cents a share. I put $5,000 into it because I saw it on Wall Street Bets. And I just thought, this sounds funny. I'm just going to do it. And I bought it. I completely forgot about it. And then the whole GameStop stuff happened. And I sold. I think it was right after Robinhood disabled the trading. And I was like, oh man, this is going to kill the momentum.
Right.
And immediately it started falling. And then I remember, I think I went to you and I'm like, dude, Jack, should I sell? And it had turned into over like 150 grand, I think at the time, from a $5,000 investment. And I sold. And I was so happy that I didn't quite get the peak, but to be able to get that price for that, that was a Hail Mary just for fun.
Profit is profit.
Profit is profit. So why do so many people miss these signals?
I don't know. Psychologically, I've always been curious why some people get married to the stock. That's another one of my principles. Like, never get married to a stock, right? Like, there are people who are just they made their money on Tesla. They made their money on Bitcoin. Now with memory stocks, right? Like SanDisk and MU, and they're just like obsessed with it. They're holding about it. Oh, that's all they talk about. And I don't get it. If you're an investor, you don't care about the short-term movements at all, and you'll just kind of ride it for 10, 20, 30 years. If you're thinking about the stock, you're essentially thinking like, should I sell, right? And so you should be okay with selling.
What would you say are the shortcomings that a lot of investors fall into? Now, most people think forming an LLC is just about filling out one form and calling it a day, but there's a lot more to it than that. And if you skip the rest, your LLC isn't really set up the way it needs to be. That is why we have partnered with Northwest Registered Agent.
For $39 plus state fees, Northwest handles the state filing and makes sure you have everything you actually need: your operating agreement, membership certificates, and banking resolutions.
Without those documents, you might be registered with the state, but you're not really ready to operate because banks, vendors, and partners expect to see them.
Plus, you get a free domain, website, email, and phone number when you file your LLC through Northwest, which means your business is ready to operate right away.
And your home address never goes on the public record. Northwest uses their own address on your filing instead of yours.
So if you want your LLC done right the first time, just go to northwestregisteredagent.com/ICH to get started.
It's northwestregisteredagent.com/ICH, or click the link down below in the description to get your LLC filed.
Thank you, Northwest Registered Agent, for sponsoring this episode.
What would you say are the shortcomings that a lot of investors fall into?
They play with margin. Like, you could play this game for a very long time as long as you're responsible and take profit and minimize your losses, right?
Mm-hmm.
Like, if you're up 20%, maybe take some more risk. If you're down 20%, maybe play a little more conservatively, or add money back to it. I think when people go on margin, when people go on full tilt, right, and trying to make that gain back as much as possible, that's when they lose it all.
And so what do you think about Chris Camillo? I'm sure you're very familiar with who he is. He fully endorses margin. And if anything, he looked at my portfolio. He's like, if I could critique anything, I think you should have a little bit more margin.
I mean, that's extreme conviction. I wonder if he has always had that view, especially when he was just starting out, or that's now when he has much more of a cushion, right, to maybe take a blow from margin. I mean, you have to be patient, right? Like, this is also like a patient man's game in order to be happy with 20% swings versus like, oh, it could have been 40% or something like that. I mean, I think the math is like you only need like 4 20% swings for a double, right? And I think that's very possible if you like find a good stocks.
I'm curious, by winning $1 million in the stock market in one day and then losing $1 million the following day, what does this do to your mental?
Oh my God.
Like, how does this affect your nights when you're trying to sleep, or just like the overall gravity of daily existence?
To be honest, it happened so fast, it didn't quite register, And
like the $1 million that you'd made had not quite settled yet.
Exactly.
And so it didn't feel like your net worth increased by $1 million.
I think also psychologically, it's very different than losing $1 million, right? First, or from your cost basis, right? Like, I gained $1 million and then it disappeared, right? So I think that's why I also prioritize like entry price a lot. That's again back to like my don't chase rule, right? Like, if you bought a stock and it went up 20% and then went back down 20%, that you could hold that a lot better psychologically than if you bought something at the top and just dropped the next day.